You are listening to Uranium Spotlight on Tuesday, April 8th, 2025. Brought to you by Purepoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, Purepoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, the uranium market holds flat. UxC publishes its most recent market survey, India clears the way for private investment, and Purepoint pushes ahead. Last week, the uranium spot price nudged up by just 5 cents, closing at $64.50 per pound U3O8, essentially flat compared to the previous week. But the modest movement hides a more volatile and telling story for those watching this market closely. March wrapped up with the lowest monthly spot U3O8 volumes in over a decade, just 15 deals involving U3O8 and 1 in UF6, totaling 2.3 million pounds equivalent. Almost all those transactions were for near-term delivery. Term contracting was somewhat better, with 11 reported utility awards across uranium, conversion, and enrichment. Activity picked up slightly as April began, especially on April 1st when 6 deals lifted the daily price to $64.35. But by week's end, sentiment shifted. As news of potential reciprocal tariffs out of the U.S. spread and equity markets stumbled, uranium prices softened. Friday saw a sharper pullback. Cameco and Orano deliveries both dropped 50 cents, while CoverDyn, quiet since February, slipped $1.25. Two late Friday trades sealed the week's tone, one at $65.25 and another at $65, wiping out early week gains. The UX U3O8 price finished at $64.35, actually down 10 cents for the week. Delivery prices now range from $64 to $65 depending on location. With equities hit harder than the commodity price, some financials may be rotating back into the uranium stocks. Spot's discount to NAV hit 17% on Friday, potentially signaling a shift in sentiment. The term market remains quiet. Utilities are holding back amid trade uncertainty, but off-market discussions continue and interest in midterm carry trades remains steady. Early last week, UxC published its latest winter market survey, reflecting the sentiment of a wide cross-section of industry players, utilities, producers, traders, and analysts. Since the last survey in 2024, the market has demonstrated notable price volatility. Spot uranium prices have softened, while term prices have held firm or edged higher. A key takeaway? Most respondents don't expect spot to rise above term pricing anytime soon, largely due to geopolitical friction and shifting government policies. Looking to 2025, price expectations for spot uranium are all over the map, from as low as $50 to as high as $105 per pound. But the weighted average comes in at around $75, suggesting optimism for a rebound from current levels near $64.50. On the bullish side, some expect carry trades to kick in, driving spot demand higher. Bears point to ramping mine restarts and weak immediate demand. Term price expectations are more stable, but there's a split. Utilities seem comfortable around today's $80 per pound, seeing it as enough to secure future supply. Suppliers, though, argue that they'll need higher prices to justify the cost of new production. Still, few see big upward pressure coming in 2025. Longer term, most believe spot prices will be higher by 2030, potentially reaching at $150. That's driven by the looming supply gap, rising mining costs, and supply chain risks. This forward view aligns with the broader concern around nuclear fuel security. Utilities remain confident about uranium availability, but suppliers are more cautious, citing geopolitical tensions, import dependencies, and bottlenecks across the fuel cycle. When asked what poses the biggest threat to fuel security, geopolitics topped the list, followed by inadequate supply and lack of competition, especially in conversion and enrichment. And speaking of policy, most respondents believe recent U.S. tariffs will cause some upward price pressure, though outcomes may diverge depending on how utilities react. If tariffs discourage U.S. contracting, prices could even fall in the short term. There's also cautious optimism around a modest uptick in U.S. uranium production over the next 5 years, though most doubt it will move the needle meaningfully. On the policy support side, most expect the U.S. to maintain LEU and HALEU offtake programs, with possible tweaks favoring American suppliers in advanced reactor fuels. Looking globally, there's skepticism that the EU will fully ban Russian uranium fuel, given varying member states' positions and limited alternatives. And as for a meaningful supply gap in the open uranium market, most see it developing between 2028 and 2031, though some think it could be pushed into the 2030s if current mines hold up. Finally, there's consensus that uranium exploration needs to accelerate. The future supply gap isn't just theoretical, it's a growing concern. So in short, current prices may support some production, but investors should be watching for carry trade dynamics, supply gaps, and how geopolitics will shape availability in specific markets. This week, the Indian government has taken a major step forward in announcing plans to remove two key legislative barriers that have long held back private sector participation in nuclear development. The first law under review forbids private investment in India's nuclear industry. That's historically shut out major domestic players like Tata Group, companies with the scale, capital, and engineering capacity to drive reactor construction. But momentum is building to reverse that restriction. The government's intent here isn't sudden, it's been a slow and steady pivot. What's different now is that policy is finally starting to catch up with ambition. But even with private capital allowed in, there's been another major bottleneck: access to reactor designs. The state-owned Nuclear Power Corporation of India has built several reactors based on its own designs, but that won't scale. For a company like Tata, designing their own reactor from scratch would be cost-prohibitive and take years. Which brings us to the second law now under scrutiny, India's Civil Liability for Nuclear Damage Act. This act assigns liability to reactor designers in the event of a nuclear accident, however unlikely. That's been a deal-breaker for most international engineering firms. The potential insurance burden, reputational risk, and financial exposure simply outweigh the upside of entering the Indian market. By moving to repeal or significantly amend this liability clause, India is trying to remove that red flag for global reactor suppliers. Now, if these two legal reforms go through, the floodgates open for both domestic and foreign investment. And the state isn't waiting to test the waters. The National Thermal Power Corporation, India's largest utility and state-owned enterprise, has already issued a tender for 15 gigawatts of new nuclear capacity. That's the equivalent of 15 full-size reactors, similar in size to the Westinghouse AP1000. More importantly for uranium investors, NTPC has signaled that they plan to sign long-term fuel supply agreements alongside reactor contracts. That puts reactor vendors with integrated fuel services in a strong position. Enter Westinghouse. Now majority owned by Cameco and Brookfield Renewable, Westinghouse brings not only the AP1000 design to the table, but also vertically integrates fuel services. Cameco, as we know, is one of the largest and most reliable uranium producers globally, with low geopolitical risk exposure. The deal synergy here is hard to ignore. NTPC is calling for 1,000 megawatt reactors, and that shortlist likely includes Westinghouse's AP1000, Korea's APR 1400, and China's CAP 1000, all of which are based on Westinghouse's third-generation technology. And don't forget, India has very little domestic uranium production. Every new reactor built increases their dependency on imported fuel, bringing sustained upside potential for global uranium suppliers. So far, those watching uranium markets and equities, India isn't just a long-term demand story, it's one that's starting to move into the execution phase. Purepoint Uranium has just dropped its Q2 exploration update, and it's clear they're pressing forward along multiple fronts in the Athabasca Basin. At Smart Lake, the team is mid-drill. 4 holes totaling 1,400 meters are testing new targets along the Grooms Lake corridor. These are high conductivity zones with the structural features you want to see when hunting for basement-hosted uranium. Drilling should wrap up by the end of April. Next up is Dorado. Backed by IsoEnergy, this program is more aggressive. 17 holes, 6,100 meters, chasing graphitic conductors that loop around a granitic dome. The target model here now incorporates data from both Turner Lake and Geiger, sharpening the hit list. At Aurora, a geophysical survey near the Rabbit Lake and McLean Lake mills have been rescheduled for summer. It'll also zero in on shallow targets. Celeste exploration is also advancing, with drilling expected in late Q3 on conductor systems in the East Block. On the VMS front, Denair West, optioned to Foran Mining, recently completed an airborne EM survey. The results were encouraging, identifying anomalies on trend with Foran's McIlvenny Bay deposit. And finally, Purepoint's 100% owned Taberner project is building momentum. 7,500 line-kilometer gravity and mag survey outlined 3 gravity lows, classic indicators of hydrothermal alteration. Drilling, geochem, and prospecting are all in the pipeline. Overall, it's a strong signal that Purepoint is executing on its strategy while uranium demand and investor interest continue to build. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by Purepoint Uranium Group. Purepoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.